In this video I will cover the topic what does it mean to have a net debt or net cash if you are an investor that wants to buy shares in public companies or you want to buy a business. Then I'll cover this in this video, a short video, because it's important for you to know that this is a very essential factor and that you need to know the amount if you want to have a real basis and really take into account how much are you paying to acquire a business. I was showing in a previous video that we were buying coconut and banana stand from a group of pirates on an island, and you can look at that video to see what does it mean to have the enterprise value and if it includes a chest of gold and what are you really paying to acquire the whole thing. But let's continue with this island and coconut business. Let's just to explain net debt first, and let's take it to the extreme. Okay, so say we would like to buy to buy control over the coconut stand for 30,000 gold. We pay 30,000 gold to the pirates, and then we can start the business. We expect an EBIT of 2,500 gold per year. But then there's we start a business, and we didn't this pirate business. It didn't include a balance sheet, and then in a few days there's these farmers are coming over here and say we haven't received money for the coconuts, all of them yet, or the bananas, and there's also this village tribe leader there. He says that we owe him 100,000 gold because that the pirate had used this to build a business and they were unprofitable for a while, and they owe 100,000 gold. And we learned that later. We didn't see it in the balance sheet. And this business has a treasure chest of 10,000 gold in it. But the island chieftain comes over after a few days and says that our business indeed owes them 100,000 gold. Okay, so how does this work? What was the net debt here? Okay. So that's a big trouble. With so much gold, we expect to earn 2,500. It would have been okay to pay 30,000 gold for the whole business, and we had 10,000 gold pieces in the business. But then they come and want to claim 100,000 gold because they have the previous pirates. They had lended, or they had borrowed, and they had been unprofitable, and then we buy the business now. We have to pay this debt back to the chieftain, and that makes if you see that makes a big difference. It would have been better if we didn't have any debt, because then all the profits we could get that paid out as a dividend a lot earlier, right? But now we have to pay it back, and there's interest maybe. Yeah. So here you see. You've just discovered the due diligence is important. Yeah, the chest of gold is looking a lot smaller now. It had 10,000 gold in it, but it's actually a debt-heavy business. So the debt here is, if you see here, the chieftain's claim is 100,000 gold, and our little stand has 10,000 gold in the treasure chest. Okay, so the net debt is the total debt, the 100,000, minus the cash that we have. So our net debt is 90,000 gold. So that means if we just pay the whatever we have right now, the 10,000 gold, we still owe 90,000 gold, and that's the kind of the best net. That's the best debt situation we have effectively. Yeah. So effectively underwater by 90,000 gold. So the enterprise value, we paid gold to the pirates. That's the equity value, and yeah, and we did also it included 10,000 gold, but 100,000 debt. So actually, the enterprise value is actually 100,000 gold, 120,000 gold. So that's a big difference. In the last video, we thought the enterprise value was 20,000 gold, and then it was okay to earn 2,500 gold before interest and taxes. But it's going to be a lot of interest here now, don't you think? Maybe the interest will eat away all the profits, and there's no coconuts. We have to sell a lot more coconuts to cover this. Okay. So this is how it works. The impact here now is that it's a lot more expensive, actually, even though we just paid 30,000 gold to the pirates and they walk away, and we have the key to the business. We have actually just bought a business that earns 2,500 gold per year. But it was not the purchase price really of 20,000 net. That would have been pretty good. But we have to pay the debt also, and we can't really pay any dividends yet. There's a tons of debt. So our price was like 48x of the multiple. Yeah. So if it was like a 8 multiple, then the business would pay for itself in 8 years, and we would cover the cost of the business with normal profits in 8 years. But with a 48 multiple, with tons of debt here, then it takes half a century to pay it back. And we don't include any interest here. That's with an EBIT before interest and tax. So 2,500 before interest. I hope the interest rate is really low, but this does not look good. Okay, so summary of the pirate scam. You see it here. I hope it makes sense. And it's a big difference, as you see, if we take over a lot of debt. And I assume, I hope we are young, because this stand is gonna have to be profitable for many years until we can get dividends and buy some bananas and coconuts for ourselves later. So that's a big difference, yeah. So and in the end, what is how would the flip side be if we had bought the neighbor business from the villagers and it had a large net cash position? Show with an example. No net debt, but instead net cash. So if you look in terminals like Fiscal or the terminals I use in this YouTube channel, you can see that I always like to check net debt under financial health to see if they have net debt or net cash. If they have net cash, that's super. Look at my favorite company, Costco Wholesale Corporation. They have $9 billion net cash. They don't have any debt, so all the earnings after reinvestment, they can just pay it out as a dividend. But if they had like a $100 billion cash debt, it would take a long time to get dividends back to investors if they didn't have net cash position instead. So here you see that the mango stand, the villagers, they are asking for 30,000 gold for the stand. the same sticker price. There's no debt, and they have a lot of a lot of gold or cash in the chest. And then the net debt. How is the net debt? It's total debt, 0, minus cash. That means you have minus 25,000 gold net debt, and minus in net debt, that is actually a net cash. That's the flip side. And you can see that in a terminal. I can show you if you're interested, just to look at Costco. You will see a negative net debt, and that means net cash. That's so negative numbers in the net debt in the financial terminal is really great. And here you see how it works with enterprise value. If you buy the mango stand from the villagers, the effective price that the net cost to buy the whole business. So when you get 25,000 gold in the chest included, you only effectively buy or pay out 5,000 gold. So the mango business is a lot better if you can earn 2,500 per year compared to the coconut stand where the chieftain wants to have the debt paid back, and it's 100,000 gold. I hope that illustrated it well. And did you like this kind of analogy and visual examples? Please give a like. It's important to know this concept when you follow the videos that you will see on the channel. We'll be using terminals such as Fiscal, for example. I can show you just my favorite company that we will be looking at a lot in the channel. And you can find this ratio by going to ratios here under financials. You can find the enterprise value here. That's including the treasure chest and the debt minus the cash in the treasure chest. And you can see the calculation of it here in the net debt. You see the total debt, but it has gold in the treasure chest. So you see here that Costco is in a very good position. Because what does negative net debt mean? It means net cash. And Costco has 10 billion cash in their treasure chest, more than if they would pay down all the debt. Because they have debt, but more cash. So the net is actually 10 billion cash in surplus. So that's pretty good. And while we are here, you see the enterprise value of Costco is close to 400 billion. And let me just show you in the end here that how it connects. And we'll be talking a lot about Costco in the future. So you see here, we buy all of the stands of Costco. We buy the sticker price, and we also effectively take over 10 billion in net cash. So the total price, the effective price to take over the whole business and get those 10 billion included is 437 billion now. And if we just want to go to the market, the coconut stock exchange, and just have a look at all the shares times the amount of shares times the share price, you will see that there's a 10 billion difference here. You see here that the enterprise value is lower than the market price because there's a 10 billion difference here in the formula. And here you see it applicable in a business. And it makes a small difference here in such a large business, and it's very expensive, but in many businesses, it makes a big difference if you buy the whole thing and whether you can get the dividends out early or if it will just be too much debt that it's very unlikely to get dividends in the future. So of course we have to know the financial position and the net debt or the net cash of the business. Hope you liked that. Give a thumbs up if you did, and hope to see you in the next video.